MCA funding, revenue-based financing, sales-based financing, they're all similar terms. And my guest today is going to talk about what it is, where the market is, where it's going, some of the best tips for brokers if they were getting into the industry right now, and much more. So my guest is joining me. It's Cosmin Panait, managing partner and co-founder of Big Funding. Cosmin, appreciate you joining me today.
Thanks for having me on, Shane.
Absolutely. Anytime. We've met probably a few years ago now, and it was really when you're starting off. You come from a structuring, like almost a Wall Street background in the structured finance space. You led rounds of for private equity and publicly traded companies across a number of different industries. So fill in the gaps for me a little bit there, and then we'll talk about big funding and what you guys are doing now.
Sure, of course. So my partner Alex and I didn't come from a traditional revenue-based finance merchant cash advance background. We had spent the better part of 10 years in capital markets, and we're lucky enough to be introduced to space. And at the very beginning, it was just us doing everything, right? So we're doing the underwriting, we're doing the ISO management, we're doing the merchant relations, even collections and contracts. We were doing everything ourselves manually. So it was definitely a lot, but it was an experience that sort of gave us, I think, a deeper understanding of the business. Sort of drives how we operate today.
Yeah, I would imagine you kind of want to know what you're doing. You get into it, you're getting the ins and outs, all the good and the bad, and then you figure out how to teach other people to do it, properly or the right way or the way that you want it to be done and growing your team. So then what initially attracted you? I mean, you were introduced to it, but what initially attracted you to the sector? And then what's kept you engaged while operating a funding company?
What attracted us was the alignment. So as opposed to a loan, you're buying a portion of future sales. The payments can flex with revenue. You're not forcing fixed payments on a merchant. Um, so it's sort of that relationship where you're not necessarily a counterparty. You're in line with the merchant himself. Um, and what's kept us engaged is the relationships, right? So being actually able to help the merchants grow, not just finance them. Uh, Keeping on with their story, right? So being part of their journey.
And so, alternative lending space, it's moving very quickly, right? So, with the mainstreaming of AI, right, to every aspect, what are the most significant changes that you've seen in the industry in the last few years?
You can tell by the feedback that we get from brokers and some of the offers that they get from other funding companies.
Hmm.
But generally, I'd say that the industry has become more structured and data driven. I think there's been better underwriting in the last couple of years. There's more transparency from what I've seen, and more importantly, there's been a lot more institutional involvement.
Okay. And yeah, we're gonna get to the institutional involvement because it's really kind of amazing when you think about where it was, and then now that money coming in, really almost every week or so, you see a new facility being placed. But first, what are some of the biggest challenges then in the industry that you see right now?
I'd say it's probably reputation and consistency. Although there's been a lot of institutional involvement, there are still a lot of bad actors in the space,
Hmm.
and that sort of impacts how merchants view the entire space, unfortunately. Which is why we feel that sort of transparency and education and sort of educating the merchant are two of the more important things to keep the industry alive.
And I love that because the education part, it's not something that I think funders focus on to a certain extent, right? At least in my view or my experience. Merchants are becoming more aware of the product and just alternative to bank financing. But it is something where if you can educate the merchants, right, that's going to have a kind of an effect, a longer term effect. Now they're more comfortable with the product. Now they understand the good, the bad, the ugly of it. So just switching gears a little bit, let's get into the economic conditions, right? So how have things changed for funders, the way they evaluate risk or structure deals?
We've seen a lot more funders being focused on durability of revenue and not just volume.
Okay.
So a lot of merchants are way more sensitive now to cash flow. The economy has been slightly choppy, so a lot of merchants are, I think, underwriting more with payment modifications and sort of longevity of any particular deal in mind, rather than focusing on the volume that they can get out that particular month.
I've read that some merchants are taking loans to cover tariffs, to cover the cost of additional tariffs, right? So product is coming in, they get hit with the tariff. It wasn't money that they were expecting to pay out. Are you hearing any of that from your particular merchants?
Yeah, well, tariffs are on everybody's mind. Obviously, we have not heard of any merchants being directly impacted by them.
Okay.
So, thankfully, that hasn't been an issue for our client base.
Okay. So what are some other particular trends then in underwriting or technology or data that you believe are reshaping things, the industry?
AI and data are very big drivers in underwriting, and we've started using some AI in our underwriting ourselves. Um, And from our point of view, what we've done from the very beginning is we send hard offers. So that's one big differentiator that we have from many other funders in the space. If we send an offer, we intend to win it.
So that
Um,
that means that more of the underwriting on the front end, more of almost everything where it's only but just what, a couple of things after they sign the contract, then it's funded.
Yeah. So, for us, whenever we send an offer, again, it's a hard offer. Our offers often get um, increased as opposed to being decreased. So, whenever we send something, we really intend to win it, which has traditionally meant a lot more. The underwriting goes at the beginning, which ends up being more costly for us, but a lot more frictionless for our broker partners, which is why we've been able to secure so many ISOs in the short 3, 4 year period that we've been in business.
Yeah.
And AI has sort of helped with that, right? Because it takes some of the load from the underwriter and pushes it on AI to be able to still send that hard offer that we're confident about.
Right. So there's a trade-off, right? There's always a trade-off of hard offer is great because just pretty much once it's signed, it's almost a done deal. Whereas people who just spit out offers really quickly, there's still a lot of legwork, and a percentage of the time the deal is going to fall apart. All right. So talk to me about the opportunities you see for brokers, for funders, that are merging in this current environment.
I always think that the opportunity is doing things the right way. So, and that for us means building long-term relationships, not just with our merchants, but with our brokers.
You guys have that synergy, right? Like that they believe in the same thing, and in the end result is that a more educated merchant with that trust.
Yeah, I mean, listen, we've cut off a sizable number of ISOs from our platform
Yeah.
over the last year or so that weren't performing or that weren't sort of representing the brand the way we would want them to. But we still have somewhere in the hundreds, and really it's pretty concentrated in only a handful that we've actually built a very close working, tight knit, in depth relationship based on trust.
So institutional capital, we mentioned a little bit earlier, it continues to be invested in alternative lending, right? Alternative funding. So all facilities that we write about on Funder Intel, to things I probably have missed. But how do you think that will influence the industry's future?
I think it's a big positive for the industry. I think it brings more discipline, brings more compliance, and brings more scale.
Okay, so let's get into a little bit about your firm. So talk to me about how you guys are different. What are the advantages working with big funding, and things that you believe that, go towards being a successful funding company?
I mean, we built our process around consistency and trust. So one key difference for us like I said before, is we make hard offers. If we send an offer, we intend to win it. We don't put something out just to retrade it later. Our offers often get adjusted up, not down. And that's usually a very big plus for the broker, because they can go with confidence to their merchant client with our offers, knowing that they would stick. Second part is we also focus a lot on relationships. So for us, the process doesn't end at funding. Our team stays in touch with the merchant throughout the process. We reach out to them periodically to make sure that the advance is going well for them, make sure that they don't need any additional capital in the interim. But we also keep the broker involved in every step of the way. So as soon as the merchant is interested in a renewal or wants to access more capital, we always make sure to loop in the broker because we genuinely view them as partners, not just a source of deals. Everything that we do is grounded in understanding the full life cycle of the deal. So everything in the business we built from scratch. So from the collections processes to the relationship management to the intake of applications, everything was done sort of built by hand from day one, so we can understand the process, the timelines, the cost
Hmm.
at each and every one of those stages. For us, it's always been and will always be the software helping the person do his job. So
Yep.
not the other way around. We're never going to have just software replacing an actual underwriter or an account manager. When you call big, whether you're a broker or a merchant, you're going to talk to a real person based here.
But what are your thoughts on excessive stacking? Is it a merchant's, kind of their decisions even prevent it from, would it be a good idea to prevent it regulatorily?
Well, so we certainly invite healthy regulation. We think healthy regulation weeds out bad actors and keeps the good ones in the industry.
Hmm.
Um, in terms of stacking, we're a funder, so we're obviously not a big fan of it.
Yeah.
We think that the sort of the core of the problem is, goes back to merchant education. So making sure the merchant understands the contract, making sure that the merchant understands the product, more importantly, um, and having that education be passed on to the merchant, not just by the funder, but also by the broker.
Now, one thing, obviously, working with your partners, you have, existing brokers with plenty of experience, but there's newbies, right? There's new brokers coming to the space. What advice would you give to new brokers entering the alternative finance space?
Focus on understanding the product, not just selling it. If you can clearly explain how the product works and when it makes sense for your client, you build a much stronger book. The best brokers aren't just focused on closing that deal today, they're focused on actually helping the merchant make the right decision and growing with them over time. The most successful ones that we've worked with had that mindset.
Perfect. Yeah, I think that is the long-term mindset is critical for most of these guys because it's, the quick money. It goes away essentially. All right, so last few things here. Where do you see the industry heading for the next, reasonable amount of time, right? 2 years is probably reasonable because things are evolving so quickly on every front, whether it be tech or regulation and so forth.
I think you'll see a lot more technology. You'll see a lot more institutional capital, and I think you'll see some more regulation.
All right, so the last thing for you, what do you personally most focus on right now within the industry, and then really kind of anything else you want to share?
We're, we've been focused on, since the beginning, we've been focused on building a platform that's consistent, transparent, and aligned with the merchant. So that means having more disciplined underwriting, clear communication, just building long-term relationships, not just pushing out transactions. So we spend a lot of time on education, making sure the merchants actually understand the product, and building processes where our brokers are true partners and get the respect that they deserve. Further than that, sort of on the technology side, we're most focused on building a platform that's consistent, transparent, and aligned with the merchant. So that means having more disciplined underwriting, more clear communication, and having long-term relationships, not just pushing out transactions.
Yeah.
We also spent a lot of time and continue to spend a lot of time on education, making sure the merchant actually understands the product and building processes where the brokers are true partners in deals, where they know that if they send a file that fits our box, it's going to get funded.
And you can find out more about Big on their website, bbigm.com. Cosmin, it's been a pleasure. I really appreciate the time joining me today. And, we'll talk soon. And, best of luck for the rest of the year.
Thanks, Shane. It's been a pleasure.
All right. Thank you.